The new Black Wall Street. Do it right, build wealth, live life, economic empowerment, real tips, insight on the new Black Wall Street. It's on the new Black Wall Street. He's your host.
All right, great day to you, beautiful people, man. Thanks so much for joining us here today on the New Black Wall Street, the Money and Power Show, and we want to welcome you to Wall Street. I'm your host, ERGJ, your certified financial educator, CEO of ERGJ Enterprises, ERGJ Black Bazaar, and international best-selling author of the book, The Black Billionaires Club. The book that I wrote there, guys, is a study of Black wealth. It's a study of the 12 richest Black people in the world today and how they built their wealth. And I just truly believe that if you want to be wealthy, if you really want to be wealthy, I recommend that you study wealthy people. Well, you can find that book by simply going to the website, www.ergjblackbazaar.com. I'm sorry, www.theblackbillionairesclub.com, www.theblackbillionairesclub.com. Good morning to you over at Facebook, YouTube Live, Instagram Live. Good morning to you. Thanks so much for joining us. We are going to be catching up on what's going on in the market, man. So welcome to Wall Street. Got a lot of fear that's going on in the market. Want to make sure that we did a good job of keeping you abreast of what is going on. Hit the like button, the share button if you care, guys. The like button, the share button if you care. And want to let you guys know about our sponsors for today. Want to say a big shout out to ERGJ Black Bazaar, the Afrocentric marketplace, which specializes in Afrocentric home decor, personal care products, and also Black art inspired gifts. You can find some pretty cool stuff by simply going to the website, www.theblackbazaar.com, www.theblackbazaar.com. Check out all the cool stuff here, man, from shower curtains to wall tapestries, all pretty cool stuff that you can add with a little bit of spice, a little bit of urban spice to it as well. ERGJ Black Bazaar, I want you to remember this, that once you shop Black, you never go back. Our other sponsor for today, guys, is going to be Big Sis Media Group. That's right, BigSisMediaGroup.com, BigSisMediaGroup.com, which is a creative design agency to be able to help you, to assist you with your design, visual, and digital media, right? They're a full-service creative design agency with tools available to help clients communicate with audiences through visual and digital media. They're there to help watch over your most critical needs like a Big Sis would. Of course, Big Sis Media helps us out a lot, guys, with our websites, with our all of our trailers and things like that. So check out BigSisMediaGroup.com, BigSisMediaGroup.com. Hey, while you guys are joining us here live on Money Monday, that's right, everybody putting comments on Money Monday. I want to say good. I hope you guys had a wonderful weekend. Want to catch up on what happened in the market over on Friday and see what's going on this morning. Some pretty cool stuff that you guys want to know. So again, I want to welcome you to Wall Street. We'd like to know where you are connecting from this morning, where you're connected from, what city, what state you might be connecting from this morning. Just want to know kind of how far our reach is as we are going to hop over into CNN and see what is happening here in the market today. Good morning over to your Instagram, G2Y. Thanks so much for joining us. Who's here with us over on Facebook or YouTube? Now, before we get into that, guys, want to make sure that we kind of go over our inventor of the day. So I want to make sure we give some props to our African-American inventor of the day. Comes out of a book that I found by Mr. Michael A. Carson. Again, this is the Money and Power, so we deal with money and power, that be economics or money, and also politics as well. And a lot of inventions that have helped change the world are actually made by Black folks. So we do have African-American inventions that change the world, and our inventor of the day is going to be Jan Ernst Matzeliger. Jan Ernst Matzeliger. And what did Jan Ernst do? Well, Jan Ernst, in 1883, Jan Ernst invented an automatic shoemaking machine. His machine, so this is a brother, his machine was able to create hundreds of pairs of shoes in a single day, vastly increasing production in the shoemaking industry. On September 15th of 1991, the United States Postal Service honored Matzeliger on the Black Heritage USA postage stamp. He was also inducted into the National Inventors Hall of Fame in 2016. So Jan or Jean, one of those two, Matzeliger, invented an automatic shoemaking machine. That's an invention that was brought to you by our brother. Good morning to you, Miss Vivian Reed. Good morning to you. Thanks so much for joining us over at Facebook. Hashtag BBC is up in the house. Anybody else that's joined us, if you are connecting with us, any group, you might want to click the button to come on in so you can interact with us here this morning. That's right, interact with us here this morning. So I was thinking about what I wanted to do. I know we got Money Mondays, but I also want to kind of go over crypto as well. And I don't know if I'm going to do this every day or every other day. I'm thinking Monday, Wednesday, and Friday, but we could probably throw in a Tuesday as well, just kind of depending on the kind of questions that you guys might have as it relates to money, the markets, or investing. We have a show coming up on Thursday, which is going to cover Forex. That's going to be an evening show over with Black Space. So make sure if you haven't joined that Facebook group, go ahead and join Black Space. I'll be hosting a show that talks about Forex as well. And it was an interesting conversation that we had. I believe it was Friday, where we were talking. I was talking about investing in businesses. They were talking about currencies, which is Forex. I've had people hit me up, say if I want to get into currencies as well. Hey, here's me. I like to stick to what I know best, right? If it ain't broke, don't fix it. So I am a stock guy. Not that I won't get into other things as well, but there's a lot of places that you can invest. What I like to really promote is the same philosophy, which is buy low, sell high. I don't care what it is, right? If you're going to do your real estate investing, buy low, sell high. If you're going to be in stocks investing, buy low, sell high. If you're going to be in Forex, buy low, sell high. You can do it either way. What we need to understand is that the market will fluctuate. The market will move, right? It's not going to stay the same. It's not going to always go up. It's not going to always go down. The market is going to move. It's just really a matter of anticipating where you foresee the market going and putting yourself in position in the front of the bus to be able to ride that wave, whether it's up or down, to be able to make you some money, to grow your money, grow your wealth, grow your bank account, grow your retirement funds, whatever the case may be, over a period of time. So, but this is something, what I've also learned is that when it comes to investing, this is something that we have to first become introduced to. That's the awareness part. And then we have to choose. This is a self-education process that we have to choose to learn it. In my community, we could talk a lot about what people are not teaching us, as if they're obligated to teach us something. Well, if we know that investing exists, we have to choose. Just like if I wanted to learn real estate, I would have to choose to go to real estate school. I would have to choose that. They didn't teach me that in high school. They didn't teach me that in college. I would have to choose to do that. So financial education is a personal decision. I want you guys to understand that financial education is a personal decision. Everybody put it on financial education. It's a personal decision. So when it comes to investing, this is a personal decision as well. I personally decided that I wanted to learn this once I became aware that this was something that was going on, that people were literally making their money grow, right, without having to work the long, hard hours for it. Now, I worked the hours to get the money, and then I used that money to go make more money. That's really what it is. And so, hopefully I can encourage you, to decide to learn this. And I know it's not an exciting topic, but you know what excites me. What there's a couple things that excite me. What excites me is when people are learning, right? People are hitting me up saying they're learning so much, they're taking action. I think Ms. Vivian Reed, matter of fact, I want to congratulate her. She hit me up. One of my cyber students hit me up. I think it was Friday. I got a little text message showing me she made one of her first investments. I was like, oh wow! So people are actually. This is why I know that I'm bringing value to the marketplace, because there's people that's taking action. They're doing something with it. They're not just watching. They're doing something with it. So you too, you could be as well if you decide to do that. We also have an investment club as a part of the Black Billionaires Club that I run. If you are interested in that, you're saying, you know what, I do want to learn. I don't want to learn by myself, and you want to be a part of our. You want to have the opportunity to invest with us. Then that'll be actually joining the Black Billionaires Club, which you can go to the website that I just shared earlier, which is www.theblackbillionairesclub.com. We have a membership there. If you want to join and become a part of a group where you can actually invest together and learn together as well, we do offer that also. Okay, that's at theblackbillionairesclub.com. Become a member today. All right, let's get right into this thing, guys. Man, I want to welcome you to Wall Street, man. Let's look at some news that you can use this morning. Of course, if we pick up where we left off at last week, I think it was, I didn't do a show Thursday and Friday. So Wednesday, a lot has happened since that time. We still have the coronavirus, which is, bringing a lot of fear in the market. The coronavirus bringing a lot of fear in the market. impacting the travel industry, the biggest, but then also having an impact in a couple other places. We'll see what is going on as well. I think I was supposed to look at a couple things. Delta Airlines canopy growth. Did we take a look? I think we're going to look at Delta today. So I'm adding a list of the stuff that I'm supposed to be covering, because it's a lot. It is a lot, guys. It's a lot. So so let's get right into this thing, guys, and see what the news that you can use here today as we look at CNN to see what is going on. I'm gonna take that down so you guys can see along with me, and we'll see here. So take a look at the market. So we have obviously the big headline: coronavirus fears are spreading. I got word the other day that there was a couple cases here in Georgia, where I'm at, in Rome, Georgia. You know, there's going to be sporadic stuff that's going to pop up, guys, because here's the deal. Before, I guess they knew it was a virus. I guess that's the CDC. People were still traveling. People were still touching each other. And that's going to still happen. I mean, this is nothing new to me. There's been plagues in this world since the beginning of time. So, you know, these things happen. Okay. It's unfortunate. And I pray that everyone, gets healthy or doesn't get sick. But this is a part of life. You live in this world long enough, you know that there will be an outbreak of new viruses, giving them new codes and all this stuff, new strains. But let's keep our head about it. Let's not act like this is the first time that we've gone through something like this, and every time there's an impact when it comes to money, because people are not transacting as much as they once did. Next big headline, guys: global markets. Right, this is a global market that we're in. We're not just a United States economy. This is a global economy. Everybody putting comments on global, right? They plunge. Now they're not plunging just because of the coronavirus. They're also plunging because of oil prices. Now we had the Chinese, we had the trade war between the United States and China. I think that's kind of figured out. Then we have obviously the coronavirus, which is a big headline. But now we have oil. There's an oil war. There's a price war going on in oil. Right now, I'm gonna show you something that's very interesting today, which I find very fascinating. Right, I'm gonna look at another company for you guys as well, which is gonna be Exxon Mobil. Let me put that in my comments. I gotta write this stuff down, because I got so many we gotta go over or look at some point in time. Exxon Mobil, Delta Airlines, canopy growth. So in the comments below, for those that are watching us live, I want to do a quick little poll to see which one you want me to cover today. All right. So we had canopy growth, which was the marijuana company that we covered on what we looked at. We said we're going to look at on Wednesday. We read about it on Wednesday. I hadn't gone over that. And I said Delta Airlines, which is obviously an airline stock. I said I look at that. We haven't gone over that yet. And now I got Exxon Mobil, which is an oil company. So in the comments below, I want to hear from you which one you'd like for me to cover today, because I can't cover them all at the same time. Let me know, out of those three: canopy growth, the marijuana company, medical marijuana company. Did we look at that? Oh, we browsed over Delta Airlines, the airline company, or Exxon Mobil. Of those three, which one do you want me to cover today? Let me know in the comments below. I'm taking you guys's what is it called? Your vote. So in the comments below, let me know which one you want to go over: marijuana, airline, or oil. Marijuana, airline, or oil. Oh my. Marijuana, airline, or oil. Oh my. Antoine Lowry. Good morning to you, brother. Thanks so much for joining us. Mr. Lowry, Mr. Antoine Lowry is in the house, man. Hey, so much appreciate what you're doing, man. You keep me motivated, man, by your pictures and stuff, things that you're doing in real estate, man. I really appreciate being a part of your journey. It's pretty cool, man. Everyone staying at home, a little Netflix and chill. I know that's right. Miss Vivian Reed's up in the house, man. A little Netflix and chill. That's right, man. So I'm talking about, man, global economy, Antoine Lowry. So canopy growth, medical marijuana, airline, Delta Airlines, or Exxon Mobil. Let me know in the comments below which one you want me to cover today. All right, now let's see what else going on news that you can use, man. We have the oil crashes by the most since 1991 as Saudi Arabia launches a price war. All right, so Saudi Arabia, I think that's something worth reading. Is launching a price war. You have the parts of the financial markets are pricing in a global recession. That's something that's interesting. Probably need to read that as well. Dirty money, the case of cash during the corona outbreak. So cash, the dollar itself, this is why another reason why digital transactions are so valuable, because you don't have to trade cash. With that, cash could have dirt and it can cover strains with it as well. This is also why I would venture to say that, we might see a rise or impact in cryptocurrency, which I probably should cover today. So much to cover in so little time. Cryptocurrency, right? Because that's not something that people have to trade, actually physically trade as well. These are all tradable assets of value to be able to continue to have a market move or flow. Okay, tens of thousands of airline jobs are at risk as the travel plunges. Right, so oil's plunging, travel's plunging, global recession they're talking about. Fear in the market. Great time to buy. Great time to buy. We mentioned this last week as well. Walmart is venturing into the healthcare field. So Walmart is expanding. They're looking at adding, this makes sense, right? Adding to a part of their store a healthcare facility, so that people can go there to get eye visits, kind of like what Sam's did, which Walmart owns as well. Going to get your eyes checked, go get a dental checkup, all that, your yearly annual checkups. Walmart's getting into the healthcare business. So it must be some money over in healthcare if Walmart's saying, we're going to roll back the prices on healthcare. We're going to roll back the prices on healthcare. All right, so we got Exxon. We got two Exxon. Okay, look like we're going to be covering Exxon today. I guess I'll get to Canopy and Delta Airlines another time. Maybe we'll carry them both. So let's take a look at these two, I think, important articles we probably want to pick up and look at today. This one here is covering the oil crash. Whenever you see something like this, historic, most sense, right? This really gets me like, oh man, this is something I want to look at. I like history, right? These most sense, the biggest drop and long, they try to make it, they add the sizzle to the state, you know what I'm saying? Adding the sizzle to the state. So oil prices suffer a historic collapse overnight after Saudi Arabia shocked the market by launching a price war against one-time ally Russia. So this has nothing to do with the United States, other than the United States benefits from a price war. Now, what happens, guys, when you have a price war? What happens when you have a price war? When there's competition, right? When there's competition, it drives the prices down, right? It drives the prices down, right? So whenever you have big price war going on, it ain't that the price is going up. That means that the price is going down. And depending on where you manufacture, create, drill, all right, this valuable commodity, which is oil, it could cause you to actually drag your prices down in order to continue to sell that commodity. And if you take the prices down, that means your profits go down as well. And so that, Saudi Arabia must be saying that we got a whole bunch of oil over here and we're going to drive this price down so we can sell our oil, right? They're putting oil on sale so they can sell more oil than Russia. When they used to work together, this is what happened when you have a divorce. You start fighting one another. So Russia and Saudi Arabia used to be married and now they divorce. It's a thin line between love and hate. It's a thin line between love and hate. So anyway, U.S. oil prices crashed as much as 34% to a 4-year low of $27.34 a barrel as traders brace for Saudi Arabia to flood the market with crude oil in a bid to recapture market share. You see what they're saying? Say Saudi Arabia saying, hey, no, y'all ain't buying oil from us no more, and we got a whole bunch of it over here. This stuff got to go. We putting it on sale. Y'all ain't working with us so that we can sell oil together. So boom, we dropped the price down. And now y'all got to drop y'all price down in order for y'all to sell y'all oil because they're going to buy from us because of our prices being low. So crude was recently trading down 27% to $30 a barrel. Brent crude, the global benchmark, plunged to 26% to $33.49 a barrel. Both oil contracts are on track for the worst day since 1991, according to Refinitiv, right? The stock oil crash also rattled stock markets, which are already in panic because of the novel coronavirus outbreak. Markets in Asia plunged, right? Europe plunged, Germany plunged, all this stuff plunged, right? So we can expect BP down 20%. We can expect today to be another negative day. I'm not gonna call it bad. Another bad day in the market probably coming up here today. Oil, fear. Coronavirus, fear. Right? See what else did I pull up? The financial markets pricing in global recession, right? Global recession. So they're saying, hey, we already dropped interest rates, right? We dropped interest rates. We got our bonds are at a 10-year low, right? They're pricing in that, hey, a lot of these companies are not going to be bringing in the profits that they normally bring in. And this is what we consider to be an outlier, right? An outlier. Now, what's an outlier? An outlier is this, right? This is how things normally go based upon our history, right? And then we have these little blips, outliers that it's abnormal. It's something out of the normal. And this is what's going to happen first quarter of 2020. It's going to be an abnormal quarter for most companies that typically do fairly well. So it'll be an outlier. Outlier saying, hey, this was something that was out of our control. This is what they call an insurance company. This is an act of God. And so it's going to have a negative impact for a temporary time until this stuff gets going over, and these companies are going to feel the stocks are going to feel the effect, or the value of these stocks are going to feel the effect of a temporary outlier. And then what happens after an outlier? Outlier to get back to normal, right? The companies that were doing fairly well, most of them, if they can survive, they go back to where they once were and go get back on track. So we'll see a lot of companies, when we look at their financials, we look at all this stuff for first quarter, man, it's like, what happened? And we're going to come back, we're like, oh, that's what happened. Coronavirus, oil scare, all this stuff as well. That's the outlier. Then we go back and say, hey, what would they normally do? Okay, here's what they normally do. Okay, well, do I think that this outlier is something that's going to continue? Or do I think this outlier is just a blip just a little blip in their history, and they'll get back to what they normally do? Good morning to you, Ms. Tisha. Thanks so much for joining us. So again, congratulations to Vivian Reed. I saw you, Miss Tiffany. Tisha. Congratulations to you as well. I seen you guys making some moves. My cyber students are actually making some moves here. All right. So what was that? The fall of the global markets has been precipitous and swift, with trillions of dollars in value wiped off markets in a matter of days, driving the decline, the spread of the coronavirus around the world, which is still dealing an unexpected shock. That's the biggest words there. Unexpected shock, act of God to the economy. Despite the velocity of the plunge, which has been undeniable, stocks are experiencing a garden variety correction for now. All right. But they're really expecting the S&P Friday down 12%. From an all-time high reached on February 19th, a bear market would require a fall of at least 20% from that recent peak. I don't think we're going to hit a bear market. Again, I just think this is an act of God, a correction, but what has really changed other than, you know what I'm saying, we have a global fear when it comes to people's health, right? And then obviously jobs will be impacted and things like that till things get back on track, all right? So that's really all we got to say about it. Now let's take a look here at the market itself. What happened on Friday? At the end of Friday, again, we had. Now this is interesting. So all of this fear, all this stuff they're talking about, the market on Friday was only down 1%. Now remember when it first started, right? When it first started, let me look at S&P 500. When it first started, we were down 4% in a day. You know what I'm saying? Only down 1%. So that's not huge to me. This is the S&P 500, guys. This is over the past. Is it going to show? Is it going to show a month? 3 months? Nope. 5 days. All right, this is over the past 5 days for the S&P 500 as far as their chart is concerned. And you can see Monday it was up 5%. Tuesday down 3%. Wednesday it was up 4%. Thursday was down 3%, and then Friday it was down 2%. Right. So we had a big losses on Tuesday and Thursday, and then Friday back to back up. But we started to see it bounce back up off of this low of 28.50. It'll probably get back down to 28.50 as well. So still holding at 29.72. So I don't think that's very bad. We're talking about oil, talking about global stocks, the oil crash, blah, 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 all that good stuff. So the Dow, which is investing in America, was down 1%. NASDAQ, which is a technology company, down 2%. S&P 500 was down 2% as well. But you know what? When I look at my portfolio, guys, I don't see it moving a whole lot because I think I found some pretty good companies to invest in. Now, this is interesting as well. Oil and airlines, what they talk about, but then we had big gainers on Friday. We had Cabot Oil and Gas Company, which is up 5%. Alaska Air Group, which is an airline company, which is up 4%. Integral Rand Industry, I don't know what that is. Deere Company, which is Deere, which is construction, stuff like that, they're up 3%. So this is interesting, right? Losers, right? Occidental Petroleum, which is an oil company. So let's take a look at the gainers and losers, right? On Friday, right? Cabot Oil, Alaska Air, Deere, Robert, Cooper Companies, Valero, which is an energy company, up 2%, right? Kimberly Clark, which was I think they deal with medical equipment, up 2%. Delta Airlines, which I mentioned, wow, up 2%. So the market's down 2%, but these companies, individually companies, were up on the day that the market was down. That's just interesting to me. All right, let's keep going. Interesting enough. All right, so we have our sector performance again: energy, transportation, oil, airlines, terrible places, going down. I think you can find a great value. Oil had dropped because of that fair 22% in one day, down to $32.43 a barrel. This is huge. I mean, whoo! It was at $47 when we looked at it last time. We looked at it on Wednesday, $47.48. Now it's down to $32. Right? That means that gasoline should be dropping as well. We should demand that they drop gas prices. If gas price is $162, per regular leaded gasoline across America, I need to be paying $162 or at least $170 at my pump. I paid $2 and some odd cents. They still getting us. They still getting you and I at the pump. Although we can see here, price of the pump down $162. So why am I paying so much? They gotta get their profit off of us anyway. So the Dow's down 8%, 9% for the year. NASDAQ down 4%. S&P 500 down 8%. So still not, we still don't see 20% drop in a year. Again, and down to extreme fear. So when others are fearful, be greedy. When others are fearful, be greedy. See if we catch up on these comments here, man. See here, yeah, I got Facebook and Apple shares so far. Fantastic. Congratulations to you, Miss Tisha. I think gas companies are good to invest in. Invest in next summer, travel going up. Yeah. I mean, we'll take a look here. So we're going to look at, I guess we're going to look at Exxon. This you guys want me to look at. We'll take a look at Exxon today. Woo! Look at this. Oh, I'm sorry. Trip.com. So the CEO, the China CEOs, right? I think they're Chinese. Trip.com and chairman slashed their salaries to zero, right? They're not going to pay themselves as coronavirus slams travel. So they're cutting their own salaries. They say, hey, if the company ain't making no money, we ain't really making no money. So that's we're not getting money like that. They probably got enough money. They don't really need that income. Anyway, let's take a look at Exxon Mobil. You guys want to look at Exxon Mobil, which I think is just a very, very interesting, look. Now, let's remember, guys, it'd be interesting to look at today. Let's remember oil is down to $32.93 per barrel. What's going on with you, Coolio? Oil is down to $32 a barrel. Oil is crashing, right? That's what they're talking about. Oil is going down. So one would think, right, that the companies associated with oil should go down too, right? We'll take a look at this. Let's take a look at Exxon Mobil. So Exxon Mobil is down 31% for the year. Okay, it's going down, and we can see that here on this chart. It's been down. Exxon Mobil, I believe, is at a 10-year low. Okay, 47.70 is a 50, basically a $50 stop for Exxon Mobil. Now, here's what I want people to think about. Let's just say we do have, let's just say there's a recession. Let's just say there's a recession. Okay. In a recession or during a recession, here's what I typically like to think about. If all hell breaks loose, right? If all hell breaks loose, then who's more likely to survive, right? Who's more likely to survive? So if all hell breaks loose, let's just say in oil, who's most likely to survive? Will it be the new startup, you know what I'm saying, oil companies out there, or will it be the oil companies that's got huge wallets? They got a wad of cash. They can buy up all the other little oil companies that's going out of business that are not able to sustain a storm. Which companies do you think, if we think about, the Three Little Pigs, which company do you think, would be more of the straw house versus the wood house versus the brick house, right? Is it going to be the big, company that's stable, been around forever? They've been through all the storms in the past. They know how to get through stuff like this. Or do we think that new companies are going to, rise, during a time of recession? So let's take a look at Exxon Mobil. I'm trying to go back. All right. Exxon Mobil. So it's $47 stock, down 32% for the year, 10-year low, historic lows. We see some headlines here for Exxon Mobil. They cut spending, right? They cut spending. They had no plans to cut spending, right? Even as crude oil prices are sinking. Why would Exxon Mobil not be cutting spending? They've been through this before, right? Let's see anything else. Any headlines there? To limit methane, Dow Jones, Boeing, whatever. 4-star. Anyway, I don't even read all that. So Exxon Mobil they're a big company. I'm not quite sure why their market cap isn't showing. Maybe we'll see that in a little bit. I believe, I don't know why. Their earnings growth last year was down 31%. This is why their stock is down, right? They earnings growth this year though is up 28%, right? Last year is down 31%, but it's up. Now, this is a year that their stock is down 37%, but their earnings are up, right? So it's almost like the market is responding to what has happened versus what is happening. Let me say that again. Their stock is down 31%. 31% for the year. Their earnings last year were down 31%. But their earnings this year is up 28%. Do you not find that odd? Wouldn't you think that, man, their earnings are back up, that their stock will be going back up with it, right? Wouldn't that make sense? Like, oh, wait a second. Something ain't making sense here, right? That's why I like to, you can't always make sense out of the market, but my goodness, that don't make any sense. Earnings growth expected over the next 5 years up 13%. So Exxon has been beaten down. They're still around, and they're now starting to recover. Although we see this whole big thing going on oil. And I've been to say that Exxon Mobil is still going to be here. Exxon Mobil is not going out of business, and we're going to continue to look at why I believe that to be so. Now, last year they brought in $256 billion as far as their revenue and sales. Their profit out of that 250 was $14.3 billion last year, which brings us in about a 5.6% net profit. 5.6% net profit. So although they had a bad year in earnings, they were still able to turn a profit. Now think about that. Our earnings growth declined, but even through all of that, we were still able to make a profit as a company. Think about that for a second. Like, this was some of the worst years that probably Exxon has had in a while, but it was still able to turn a profit. What do you think happens when they have a great year? What do you think happens when they have a great year? If this was a bad year for Exxon Mobil in 2019, and they were still able to turn a $14.3 billion profit, and that's a bad year, I like to have some of those bad years as my bad years for my bank account. I like to have some of those bad years. I had a bad year. It was a bad year, and I brought in $14.8 billion. That's a bad year for me. After I sold $256 billion worth of stuff. That was a bad year. So what do you think happens during the good years? All right. They're saying, hey man, down to $47 a share. The analysts are saying, man, this is way too low for Exxon. They're saying, man, Exxon could be as high. They're projected to be as high as $98 a share over the next year, the next 12 months. That's what the analysts are saying. Now, take a look, see here the profile, man. I'm still trying to figure out how big Exxon is. I don't know why their market cap isn't showing here. We know it's a multi-billion-dollar company. Not quite sure what's going on here. So over the past 4 years, they declined in their employees. They're back. They started hiring again, hired more employees in 2019 than they did in 2018. That shows a turn, right? Again, that shows a turn and saying, hey, we're starting to ramp back up as far as bringing people in to help us do more work. I see a turn there coming. All right, Exxon Mobil engages in the exploration, development, and distribution of oil, gas, and petroleum products. It operates through the following segments: upstream, downstream, and chemical. Right? It was founded by who? Who do you think Exxon was founded by? None other than John D. Rockefeller. So you mean to tell me a company created by the Rockefellers, right? John D. Rockefeller. You don't think that that's still going to be in the United States? A name like that, a company created with a name like that, the foundation of America is Rockefeller and the good old boys, right? In 1882 in Irving, Texas. So 1882, which is 100, 140 years ago. So Exxon Mobil has been around for 140 years, founded by one of the big bad men of the United States, John D. Rockefeller. You can't make this stuff up, folks. You can't make this stuff up. Now, let's keep going. Of course, they do provide a link here to let you know if you say, hey, you want to learn more about Exxon Mobil investing, you can go directly to the investor relations on their website. We'll do that in just a second. Now, I don't think this chart's going to do me very well because it's not going to go back far enough. I really need to go back further, but it goes back far enough. Here's a 10-year chart. I know it's not too big on the screen, but over here 10 years ago, Exxon back in June of 2010, Exxon Mobil was $65 a share, $65 a share, and now it's down $47 a share, right? It's been as high as $100 a share. So 10-year low for Exxon Mobil, increasing in their employees in which they're hiring, right? Increasing in their earnings, turning around financially, yeah. And then let's take a look here. 5-day. Look at this, man. I just love stuff like this. Like, boom, it can't even. It's like I'm telling you, if ever I saw something, and I would say something's on sale, like super sale, like it's almost a clearance. It's almost a bargain basement sale right now. I think it's a huge bargain for this type of company. But I will say, I watch to see what happens here with this oil thing because it's going to have more impact. But shoot, if I can get Exxon Mobil for $40 a share, whew, oh boy, I'll be happy as a lark. Let's take a look at their financials, guys. What's going on with your another Dom dude? What's going on with your Instagram? So Exxon Mobil, guys, again, 2019, $279 billion of net revenue. This is what they sold. How much stuff they sold. Then they had to pay to be able to sell that stuff, the cost of doing business and all that stuff. And so their gross income was $67 billion. Now look at this. Over the past 3 years, $41 billion, $53 billion, $67 billion in gross income. Over the past 3 years, $197 billion in sales in 2016, $237 billion in sales in 2017, $279 billion in 2018. Let's find out what they did fourth quarter of 2019 because we don't have the 2019 stats showing up here. That's 2018. I imagine they did more in 2019. Quarter-wise, since we don't have a report yet, quarter-wise for 2019, $61 billion in quarter one. Quarter two, $67 billion. in quarter 2 of 2019. Now, I don't know where quarter 3 and quarter 4 is just yet. Maybe they still have to report, but this is what we have lately, right? So still about 67, 65 billion per quarter in sales, right? For Exxon Mobil. Let's go back to the annual data. These are numbers, guys. For those that run businesses, y'all know how important these numbers are. For those that don't run businesses, you got a personal bank account, you got a personal account, you got a personal business for yourself. You know how important these numbers are, how much you make as far as your net income versus your gross income, how much you take home. You know how important that stuff is, that you work all those hours, right? Their net income, again, 2016, 7.8 billion. That's a bad year for them. 2017, 19.7. 2018, 20.8. This is their net income. This is their take-home pay. After they paid all the bills, paid all the lights, did the cost of doing business, after all that stuff, and all their sales, all of their expenses. This is what they're taking home, right? So we're talking about, positive forward movement as far as their financials, as far as their books is concerned. Although we see a stock that's going in a wrong direction, quote unquote, relative value. Here's the liabilities and assets. Here's what they own versus what they owe. Exxon Mobil, John D. Rockefeller, 1882, right? Net assets, guys, total assets. This is the stuff that they own after 140 years of doing business across this great state of America and beyond, or great country of America and beyond. They own over $346 billion worth of stuff. A company created by John D. Rockefeller that's been around for almost 150 years owns $346 billion worth of stuff across the world. Okay? Their liabilities, this is what they owe, right? Only $147 billion worth of stuff that they owe that they still got to pay off of some sort, right? That leaves you with positive equity of $191 billion. $191 billion. They're saying, hey, how would I feel about spending $40, $47, whatever, to invest into a company with a positive equity of $191 billion that's been around for 150 years? You see what I'm saying? Oh my goodness. Oh, this stuff, like, wait a second. Wait a minute. Woo! Now, that's not it though, guys. That's not it. Then you get a chance, man, come over here, Exxon Mobil. This is their website. You come over here, boom. You say, click on this thing, say investors. Then we click on the thing, say investor relations, because this is where they want people saying, hey, I want to find out more from Exxon. I want to hear from the horse's mouth, not from CNN. So come over here, Exxon Mobil, ticker symbol XOM. Everybody putting comments on XOM for their ticker symbol, right? It's $47.69, $47.69 per share right now. Okay. They got a little conference call. Look at it. They got key resources. You can look at their publications, quarterly earnings. So this, that's a quarterly earnings, which we can look at in just a second. We probably need to look at dividend information. So we're going to take a look at the quarterly earnings. We're going to look at the dividend information. Let you know the SEC files. This is how you know the company is legit. They filed with the SEC. So they registered, obviously. Okay. Quarterly earnings in 2019. I don't know if we're going to look through this because this is going to be a little bit too much for most of you guys. But fourth quarter, they have web presentation materials. Like, they give you all this stuff. This is their deck from fourth quarter, right? Look at this, earnings. Quarter one, fourth quarter. Now here's the third and fourth quarter. We missed those on CNN. 14.3 billion in earnings for Exxon, right? Positive, man. Look at this shit. 3.36 earnings per share. Oh my goodness. Free cash flow. Oh my goodness. I would have a ball just reading through all this stuff. Downstream, chemical, corporate finance. They look at all of those different, remember those three different categories. 2019 earnings versus 2018, right? 2018, 20.8 million. And then they were down to 14.3. So 2019 was a bad year, as I just said. Their downstream was down, chemical was down, corporate finance was down, but their upstream was doing pretty well. Okay. So this is narrow North American differentials, lowering offering. Man, look at this. Look at this here. Look at this here. Oh my goodness. Woo! Who else is doing this? This is Exxon Mobil's financial breakdown and statement. Let me see, make sure you guys can see this stuff on screen. Oh, yes, you can. Oh, yes, you can. Who else is doing this? Who else is showing you this stuff? So here's that 3, downstream perspective. I mean, you go through all of this stuff. Okay. Right, boom. I mean, oh my goodness. Oh my goodness. Downstream, this is those 3 categories they talked about. Downstream fundamentals remain strong. Guyana update. I don't know what they're doing in Guyana. Oh my goodness. See, if you're really interested, you come through and you read all of this stuff. But key message: delivering executive value accretion of project portfolio upgrading. This is what they went through when they had the investors call. All of this stuff, right? Which many guys probably don't know and understand, but you just read through it and begin to. I mean, something might catch your drift. Let's take a look at their dividend. So again, $40, basically $50 investment per share for a company that's been around for 150 years. That was started by John D. Rockefeller. That had one of their bad years, they still had you still had positive net profit margin in a bad year. Here's their dividend information. So they pay a dividend as well. Basically, they're paying in 2020, the first quarter, they paid 87 cents. Look at this. 2013, 57 cents, 63, 69, 73. So every year they have increased in their dividend payment per quarter, right? So 87 cents per quarter. Look at this. Now, this is the cake. I mean, this is the icing. 87 cents per quarter. That's a quarter, right? So we want to multiply that times 4. That's $3.48 per year per share that they pay back to you. So if I were an investor, if I were to get Exxon Mobil today, right? If I would get Exxon Mobil today, I pay $47.70. At the end of the year, they're going to give me back $3.48 just for being a holder of their stock. Now think about that. That's like cash back. Now many of you guys like cash back on your credit cards, although you listen to this. You get your credit card, you get some credit, and you pay interest on that money that you borrow, and then they're gonna give you some cash back, basically giving you back some of the money that you pay interest on. And y'all think it's a good thing. No, they just giving you money back from the 13 or 20% interest that you paid. They give you a little bit of money back, and that actually makes people, that really gets people thinking like, oh man, it's a great company because they gave me some cash back from the money that I borrowed from, that I paid interest on. How much did you pay in interest versus how much they gave you some cash back? Huh? How much did you pay in interest versus the money that they gave you cash back? Think about that for a second. This is why we got to wake up, people. This is why we got to wake up. Now, all right, so 87 cents is $3.82. If I pay, what is it, 47.70, something like that? I got to go back. 47.70. Then what we can do, you take that $3.48 divided by 47.7, and we are now talking about a return, a dividend return. What's going on, Corinda? A dividend, a yield, annual yield of 7%, 7.29% from the current price of Exxon Mobil today. So if I become an investor of Exxon Mobil, listen to this. This is how this works. Think about this for a second. Let's just say you own a credit card. You literally are investing in that credit card company when you own a credit card, because you're saying that, hey, I want to be able to use your money. And so, actually you're not investing. You're participating in their profits. You're not investing. You're borrowing their money to go and buy stuff that you don't need. And you not all the time, but most of the time, buy stuff that you don't need in order to pay them back what you borrowed plus interest. So you're being a borrower. And then they say, Well, because you've been borrowing from us for so long, and because you've been paying this interest rate for so long, we're going to give you a little bit of money back, right? So you're going to pay, let's just say you pay 10% interest on the money that you borrow. We'll give you back 0.1%. 0.1% back if you keep on borrowing money from us. And we think that's a good thing. On the flip side, we can say, hey, you know what? Now here's the thing. What if I took some of the money that I borrowed? Let's just say I borrowed money, and that money that I borrowed, let's just say I borrowed it at 5%. Then I took that money and I invested it into the stock market and with a company that will pay me back 7%, 8%. How wise would that be? So this is kind of how you can actually use other people's money to make money. So if you borrow money, let's just say 3%, 4%. And instead of borrowing it, see, here's the gig. They'll let you borrow money, right, to buy a car, which is relatively not valuable, or it loses value over time. They'll let you borrow money to go to school so that you can pay money back, which is good, your education, stuff like that. But will they let you borrow money so that you can invest, but borrow it to the point where you can win? See, there's this thing called margin when you go in the stock market. Everybody putting comments on margin. So margin just says that, hey, you know what? You've been using our platform, and we trust you enough to let you use our money to invest. But even that's a gig, because they will let you borrow that money, but the money that you borrow on your margin account typically is 8 to 10%. So even if you did make back 7%, you still lost, although it looks like you won. That's why margin, you got to be very, very careful when it comes to margin or actually borrowing money, because it's not set up for you to win unless you're smart. That's why we call it smart money. But if I could borrow money at a 3% rate, but I could make 7%, that means I could double that money. See what I'm saying? I could double that money. That right? That makes sense. Now, Courtney, you're right? So that's another thing, right? That's why I can't wait to work with you on this, right? So she say, hey, only on real estate investments because it's the safest, right, and soundest investment, right? Well, you know what? I don't know necessarily if you can say the safest. I mean, that's debatable, right? I think what constitutes as safe, right? Other than what you're just saying, hey, we have a tangible. I think two safe, sound investments, right? If you say real estate, I don't really like to debate on real estate versus stocks or whatever, because I think they're both relative. I think it's what people value. We value property, and we value businesses that provide the services for everything that we're going to do around that property. So they're both safe and sound. We can't have one without the other. We need both. But in this particular case, right, we we can see property that we may own or property that we might invest in, but we can also see the business that's taking place around that property, the food that people are eating, the gas that people are using to transport themselves. This is called the economy. So I think both are relatively in the same vein. I think as African Americans, we're just more apt to real estate, but I think they're both worthy of the conversation. Real estate and stocks. This is how people get rich. Okay. But I think also what you're saying is, hey, borrowing money, other people's money in order to invest in real estate, which over its historical period time frame has relatively gone up in value, a safe investment, right? But we see the same thing here. We're talking about Exxon Mobil again. A 150-year-old company started by one of the founding fathers of America, paying 7.9% annual yield to some that could represent a safe, sound investment, right? $340 some odd billion company or whatever it is. Come on, man. I mean, this is just what we're looking at here today. What's going on with you, Miss Dilbert? Good morning to you. Antoine Lowry, thanks so much. Good morning to you. So, but this is why, Antoine, according to Gordon Smith, this is why I love kind of got what you guys do. Because when we all join forces, right? You guys take care of the real estate stuff, right? I'll be over here handling the stock stuff, and we all get rich together. That's how I look at it. Because let me keep on studying this stuff. Y'all keep on studying that stuff, and then we bring this whole little schooling thing together. And then next thing you know, we helping everybody get rich. That's why we started our investment club last year, right? In 2018. So that we could work with other people to help them to understand what they did not know. The investment club really, although we're investing money together, it's really a financial education club, because now you get a chance to be around people who can talk to you, help you change the way that you think, help your money philosophy. Just like we just had this little conversation, people are like, man, wait a minute, right? That's the gag, man. Let me start being smart with my money. Now, we did say as well, in case you guys don't remember, we talked about that. We said, hey, Ms. Vivian Reed, still got to get your thing out to you. It's the Nutty Professor Challenge, okay? I want to reiterate this and probably reiterate this every time we have a show. The deal is, the Nutty Professor Challenge is this. I understand that we all do some stupid stuff sometimes when it comes to our money. And another professor I was saying, hey, this year, 2020, you're going to probably still do some stupid stuff with your money because you like to live, like to do this, like to go that, whatever. That's not going to change. Well, all I'm saying is, here's what I did. Let me just tell you. Okay, let me just give you a story real quick. We'll close the show out. Here's what I did. There was some temptations that came my way last week for me to do something stupid with my money, right? For me to, waste it on frivolous stuff. Just so I could be entertained or whatever the case may be. And so although I was about to go do that stupid stuff, I thought about the Nutty Professor Challenge. And instead of doing that stupid stuff with my $20 or my $25, because it all adds up. So we think, oh, it's only $20, $25. But that $20, $25, you do that every day, or you do that every week, it all adds up. And that $20, $25 that you kept overlooking is the same $20, $25 that turns into $2,500, that turns into $25,000 that you start trying to borrow from other people when it actually has been in your hand. You just kept wasting it. But anyway, let me just get back to what I was saying. So I took that little $20 and I was on my little phone and I started saying, well, let me just look at this thing, boom, boom. And I started looking at Cash App and learning how to invest using Cash App. And some of you guys might use Acorn. Some of you guys might use Robinhood. Some of you guys might got a piggy bank. We got a little savings challenge going on as well. I don't know. But I said, let me take that little money that I was about to do something stupid with, and let me do something smart with it. And I took that little $20, that little $25, every time the urge came up, because then here's what happens. Here's the psychological impact that it has on people when you start to do smart stuff with your money. You start to feel, and Courtney, you tell me if you ever felt like this. Antoine, tell me if you felt like this. You or Jay's Beauty ever felt like this. You start to feel like you broke. I mean, it feels like you don't have any money because you don't have the cash, in your hand. You start to feel like, man, I can't, I ain't really got the money to go to the movies today, right? You start feeling that way. But what's happening is you're cash poor, but your portfolio rich. See, you're cash poor. You said, man, I ain't got it. I ain't got it to go to shopping this weekend. And sometimes it hurts us to say I ain't got it. But the reality is the reason why I don't have it, because I put that money somewhere where it's growing. So I ain't got it right now. But when I get ready, I'm going to be, retiring on the yacht, and I'm going to have the Corvette when I'm 50, 55 years old. You know what I'm saying? But I feel like I ain't got it right now. And that might be true. Because I do have it somewhere else, and I got it somewhere where it's actually growing for me. Instagram, we're going to get illusion. Thanks so much. Keep going over on Facebook and YouTube. So another Professor Challenge is going to have you feeling like you ain't got it right now. And sometimes for many of us, that's just what we got to say. That's how you may need to feel. So you can stop doing stupid stuff with your money. And you can just simply say, I ain't got it right now. And you can also feel good because the reason why you ain't got it right now is because you put it somewhere that you ain't touching, that is growing, so that you can leave an inheritance to your children's children. So for those guys who don't know, I've been teaching you guys how to invest using Cash App. It's a great place to start. You guys can do that. We have virtual students that are doing that all over the place. If you're interested in that, learning from me, just inbox me. If you have any particular questions that you love answered here on the show. Also, if you're interested in joining our investment club, theblackbillionairesclub.com, place you can actually join, become a part of our group, and then you can be eligible to be a part of joining our club when we do open enrollment in the next couple of months. This is the Money and Power Show. I want to welcome you to Wall Street. We talked about global recession. We looked at Exxon Mobil today, and we talked about oil plunging, coronavirus' impact. And I love to know, what kind of impact are you guys seeing over in the real estate market? That's interesting as well, because it's all impacted, but is it really? I mean, it is, but is it really? In the comments below, I'd like for you to share something that you learned today, because here's the deal, guys. I don't do this just to do this. I do this to make a difference, and hopefully we made a difference in your life today. I'm ERGJ, your certified financial educator, and I want to say thank you so much for tuning in. Hit the like button, the share button if you care, like button, the share button if you care. Man, we getting up talking about money in the morning. It gets because we're probably gonna spend some today, but let's not do just stupid stuff with it. Let's start to do some smart stuff with it, and we can see our wealth grow over time. I want you guys to remember this, man, that the tortoise beats the hare all the time. Building wealth is a marathon, not a sprint. Building wealth is a marathon, not a sprint. I want you to remember this, that it takes a village. It starts with us. Let's build as we climb together. We all we got, beautiful people. Matter of fact, we all we need. And thank God that's more than enough. Until next episode, you know what time it is. Mr. DJ, hit the music.
The new Black Wall Street. Thanks you for joining the show. We gave a lot of great tips, but it's time to go. Take the knowledge we shared, hope you use it and grow. We will see you all there at the next episode of The New Black Wall Street. The New Black Wall Street.